This month, my strategy had a 100% win rate, and it gives me consistent days like this, and this. It's the exact same strategy that got me interviewed by Funding Pips. We're going to backtest an entire month together, step by step, so you get it right every single time. But the strategy alone won't make you profitable, because what's the reason why most traders fail? They can't even watch a video until the end. Don't prove it to me, but do yourself a favor and pay attention to every single step that I'm giving you in this video, because only then I can guarantee the same results. Alright, so before we're going to backtest the entire strategy, we have to talk about a couple of rules that are non-negotiables. So first of all, you're not allowed to trade the first 3 days of the month. What do I mean by that? It's very simple. So let's assume the month has just started. You're not allowed to trade the first, the second, and the third of the month. Now the second rule is, don't trade NFP days and also no bank holidays, because just from backtesting I've seen that on those days we fail a lot of the times, and you will fail too if you trade those kinds of days. Now, how do we know what NFP and bank holidays are? I want you to go on forexfactory.com and click on the calendar icon right in here. Then we'll skip a little bit forward because right now we have no NFP days, and as you can see, if we scroll down a little bit, you can see that on the Wednesday, the 1st, right? So this also aligns with the first rule of not trading the first, second, and third day of the month. You can see ADP, non-farm employment change. That is the NFP days that I'm talking about. And also, you're not going to trade bank holidays. And the third rule, which is often very overlooked, you set and forget. You don't change your stop loss, you don't change the take profit, and also not the entry. Everything is very defined and you should not change it. Otherwise, you will not get the same results. Okay, so straight into the backtesting. What I can see right from the start is we have a very big price action gap. Now, the thing about price action gaps is that a lot of times we like to fill them out with a body closure. Now, in this example, we are on the 4-hour chart. So we would have to need a 4-hour candle that closes above or at least at the high of this entire gap. Until that hasn't happened yet, we're looking for higher prices. So I am going to remove it and only look out for the high of it because that is what we're interested in right now. The next thing is we want to go on the 1-hour chart. Now on the 1-hour chart, if we zoom in a little bit, you can see that we have relative equal highs. Now the thing about relative equal highs is it is a very strong and reliable magnet to the upside, right? And also what do you see? You see an FEG created on the 1-hour chart. Now, the thing about FEGs as a whole is similar to the price action gap. They love to be traded back into. Now, the difference between the entire price action gap that I have marked out for you on the top right here is that the FEGs are not required to be fully traded into with a body closure, right? It is enough if it only trades back into it with a wick. But for the gap, it needs to be with a full body closure. Now I have already plotted out the entire trade for you, and as you can see, we have 3 confluences: the gap, the relative equal highs, and the FEG. And you always want to target a 1 for 0.2. Now, if we just let that play out for a little bit, we can see straight up TP hit, and we're out of the market. Let's talk about the elephant in the room. Why is the risk reward so low? This is a new wave of traders. If you want to know more about it, you have to join the Discord in the description. But that is the only way to achieve a 90% win rate in trading. Now guys, you can have the best strategy, the best risk management, and also be a master at psychology, but every professional trader needs a professional journal. That's why I personally use TradeLens. Now if you want a 10% discount, it's the second link in the description. So that is our first win. So now we're just going to skip forward to the next day. And as you can see, the next day already occurred. We have the same framework once again. So once again, we're just going to take our long position tool, have a risk reward of 1 for 0.2, and we're just going to let the trade play out. And as you can see, straight into our take profit, because this win rate is extremely high, I'm telling you, right? But now we have the relative equal highs already being taken out. So in the original trade, we had 3 confluence. We had the FEG, the relative equal highs, and the gap. But now the relative equal highs had been taken out. We only have the gap. So what do we do now? Now, first of all, I want to skip forward onto the next day and look at the recent price action, okay? Okay, so I have just skipped forward to the next day, as you can see. And now the things look a little bit different because we have the gap, but we don't have the relative equal highs and we don't have a FEG. This is where we go onto a different time frame to get a little bit of more information about the market. Now, we want to go onto the daily because that is straight up telling us we have another gap right in here. As you can see, I have just explained to you that gaps often love to be filled back, but more importantly, we have one that is even closer to the chart, which you can see right in here. And what have I told you? We love to trade back into it with a body closure. Now, the next thing that speaks for us is that we have already taken out the liquidity right in here. If you cannot see it, I will zoom in for you and you can see the liquidity has already been taken out. So that is basically fuel for us to go higher. Now, I am going to remove a little bit of stuff so the chart doesn't get too messy. Then we want to go onto the weekly chart. So on the weekly chart, we have another gap that we want to trade back into. We have a lot of different price action gaps. I am going to remove this entire area once again so the chart doesn't get too messy. The only line that we really care about is this line right in here. So going back onto the 1 hour chart, you can see that we have still plotted out the line and we want to go for 1 for 0.2 as always. You can also go for that low. It is very safe to trade, but we are a little bit more conservative. That's why we don't want to go for that low and have a little bit of more room for the trade to play out. And I really don't even have to look at the chart. I already know that this is going to be a take profit hit because I'm so confident in the system, and you can do the same. All right, so we are already 3-0. Now I want to skip a little bit forward onto the next day. And the same framework applies here once again. We have the gap that needs to be filled out. Now this time it is a little bit different because I want to see a little bit of down movement. And if you zoom in even more, you can see we have another price action gap right in here. We need to trade within a body closure above this. Now, this is only a little confluence, and if you zoom out, the picture is way bigger, right? But we want to see a little bit of down movement in order to take a little bit of a higher risk to reward. I am going to skip forward, but before that, I am going to set up the limit order. Alright, so the limit order is set up right below this low right in here because this low is a very weak low and we are trying to trade into it because we know we will get to that low first. Now for more specific details, because I cannot cover everything in one video, you would have to join the Discord in the description. And we are just going to let the market do its thing. Now we're hovering a little bit around. We have already reached the take profit, but that is no problem. We're still in the trade. And as it looks like the market is going without us, still trading. Okay, so this is the point where we have reached the entire gap high. Now, what we're going to do, we're going to close this trade. This is very important that you don't miss this kind of stuff, right? I have told you that as long as the target has not been hit, you can long this on to the upside. But in this case, we have already traded back into it. So we're going to remove this trade because we have not been filled. Now, what we do now, we go onto the 4-hour chart and check the entire price action gap. I want this candle to close above this entire line with a body closure. If this happens, then this entire gap becomes an invalid confirmation. Then we would look out for another gap or just in general more information about the market. Now I want us to play out a little bit, and as you can see, we traded back into it with a body closure. So now we're going to remove the line because now it doesn't matter anymore. Now guys, I can't talk about every specific detail about my strategy in one video. Now guys, I can't talk about every specific detail about my strategy in one video. That's why I would like you to invite to my free Discord. It's in the description down below. Now back into the backtesting. Now as you can see, we have a bunch of little FEGs that have formed right in there. What have I told you before? FEGs usually always get traded back into. And since we just have so many of them in a row, at least one of them has to be traded back into. And we're going to take the very easiest target, which is this FEG right in here. If we already traded back into it and we see another opportunity, we even want to trade back into this FEG. Now another thing about this is, if you draw a Fibonacci, so basically the premium to discount range, from the low and the high of this entire move, you can see we have not traded back into it. This is indicating to us that we will go lower, at least to the 50% of it. And even if we're not going to the 50%, so basically the equilibrium of this entire price action move, then we at least go a little bit lower. That is giving us an entire framework to short this. I have skipped a little bit forward, and although we have gone to the first FEG that we're looking out for, we have only tapped into it with a wick. That is not strong enough. I am going to remove the 4-hour FEG for now. As you can see, We have a 1 hour FAG. We also need to trade back into it. I'm also going to remove the 4 hour FAGs for now. As you can see, we have relative equal lows combined with an FAG. This is a very strong signal, guys. A very strong signal to trade this to the downside. Okay, so a quick summary on why we're taking it straight. We have the equilibrium, which we have not traded back into yet. Then we also have the relative equal lows. And then we also have the FAG, which we also need to trade back into. It's very simple. You only need 2, or if the signal is very strong, 1 confirmation, which is the gaps that I've explained to you earlier. Now let's just let the market do its thing. As you can see, this will most likely straight up go into the take profit. Now it took us a little bit of time, but that is very usual. As you can see, this is another win for us. So right now we are 4-0. Alright, so I've already skipped to the next day. We have already traded a couple of days without really looking into the daily or weekly. So you always need to do that. So here we are on the daily chart. As you can see, the gaps that I've marked out earlier, they have been traded back into, and most importantly, not traded back into just with a wick, but with a body closure. So those are invalid now. So the first thing that comes to mind is, okay, we could short this because we have already taken out the gaps. However, looking at it from a different perspective, you can see that although we have a very big FAG right in here, which is a daily FAG, it's a good magnet onto the downside. However, the problem here is that right now we are kind of stuck in a range. So we don't really know if we will go for the previous day high or for the previous day low, which is exactly why we're just going to skip this day. Now, to a lot of people, this is very unfamiliar, but guys, you have to stick to the rules. You have to be disciplined to not take the bad days. There is not going to be a trade every single day. Now guys, I can already tell you that there's not going to be a trade every single day because this strategy has a 95% win rate. So we're only taking the most best and high quality trades. If you're taking bad trades, then that number, that 95%, is going to lower significantly. So we really just want to skip on to the next day. Now as you can see, this was a very weird and unusual day. We have gone for the high, but we have also gone for the low. If you go back to the chart, you cannot see examples where one daily candle takes out the previous day high and previous day low. It does happen occasionally, but it is not often. So we're going to skip on to the next day and show how that opens up. And would you look at that? We have an extremely low probability day, a lot of volatility, but for this strategy, you want the least volatility as possible. And only now we are allowed to go onto the 4 hour, 1 hour, and only now we are allowed to go onto the 4 hour or 1 hour time frame to look into it a little bit more further. I am going to go onto the 4 hour first. Now on the 4 hour chart, what I can already spot right from the start, we have an FG right in here. We have traded back into the entire range. Remember what I have told you earlier, we love to trade into the equilibrium of the entire ranges that we are doing on the chart. This same thing applies to this current price action that we have right in here. Now we have not traded back into the equilibrium yet, which is exactly why this is a reason for us to long. However, even if the chart, even if this candle is about to reach the equilibrium price, this is still a valid. This is still a valid trade entry because we need to trade back into the FEG right in here. Now from a 1 hour perspective, we can see another FEG right in here that we have not traded into at all. So before I'm going to remove everything so the chart doesn't get too messy, I want to do a quick summary. We have the premium to discount that we are about to trade back into. Now some people say that we have already traded back into it. However, at this point in time, this was the lowest point. So we did not trade back into it, and you always have to readjust your premium to discount. And as you can see, this little price action from this leg on did not return back into the equilibrium. Okay, so we have the premium to discount range, we have the 1 hour FEG, and more importantly, we have the 4 hour FEG, which we have not traded back into yet. So as always, guys, we don't want to be greedy, so our profit target and stop loss is very generous. So if we just let the market do its thing once again, you can see that even if we go into a drawdown, I'm very confident that this will hit take profit. And as you can see, it clearly did, just by identifying the right price action. Now, of course, we have gone into a little bit of a drawdown, and it's okay even if it goes half into the entire stop loss. This is not unusual, right? We're only taking the highest quality setups. That's why we know we will hit take profit. Now, as you can see, I'm on the daily chart again. I've already skipped on to the next day. we have had our initial big push onto the upside, traded back into the range, and now we are kind of hovering around the middle. Now going on to the 4-hour chart, what can we spot? Now we have traded into the 4-hour fair value gap, so that is not valid anymore, but I still want to mention it. The reason for that is because, as you can see, the order flow is starting to change, although we have gone up to the upside. We have traded into multiple FVGs. It seems like that the order flow is changing right now, especially because we have traded below this low right in here, taken the high of the initial price action move that created this low. We have taken it out and then immediately went lower. Traded back into the FVG that we have marked out earlier, and now we are just trading onto the downside. Well, we can also spot this right now. Based on that logic alone, we have another 4-hour fair value gap right in here, which indicates to me what happened right in here is also going to happen again, and we will trade to the downside. Going on to the 1 hour, we have one single problem that prevents us from going on to the downside, which is we have the relative equal highs right in here. And then we also have an FEG. You could also call this a BPR, but we are going to keep things very simple for this video. If you want to learn more, join this one in the description. And you can see we have another FEG that we want to trade back into. Now, here's the problem, the kind of dilemma that we're facing. We want to trade on to the downside, where we have the relative equal highs, but also the hourly FEG. So what we're going to do, we want to wait for one of those levels to hit, and only then we're going to trade a trade onto the downside. Okay, so a quick summary, we have the relative equal highs preventing us to go lower. We also have the hourly FEG, but the entire framework suggests that we will go lower. So I am going to remove it now so it doesn't get too messy. And as you can see, the main target of today, trading back into this low. But we are very generous, so we are not going to shoot all the way through the low. We're just looking for a very small target. Now the limit order is already set up. Let the market do its thing. Now, I want to stop this for a second and stress on this little bit of price action because this is giving us more information. We have not traded back into this low, so our target is still valid. This entire trade, you should not remove it because it is still valid to take. Now, and another thing which people often overlook, adapt to the market. You can see we have another relative equal high right in here. And as I have already told you, relative equal highs are a very strong magnet onto the upside. So we are still going to wait this trade out because this is now giving us more reason to go higher first before we go lower. So we are going to let the market do its thing again. Okay, this is the part where we have already taken out the low. So we are going to remove this entire line and all of the remaining lines, and we're also going to cancel the order because now the ultimate take profit for that matter, although we're not trading all the way to this low, but the ultimate target is already gone. So this is no trade for this day. So guys, we have missed the initial trade trading onto this low, but it is no problem. The market will reward you if you're just patient enough. Now, as you can see, we have relative equal highs and also we have an FEG on the hourly chart. This is a very strong signal to go on to the upside. The next thing that I can also spot is we have taken out all of these lows with a big wick. This indicating to us that we have enough fuel to go higher. So this is once again very light work to us. We're just going to trade it onto the upside because we know that FEGs and also relative equal highs are a very strong magnet to the upside. And we're just going to let the market do its thing as always. Watching the trade, and you can see we totally smashed onto the take profit. This is why it's so important to have a very low take profit. Now, if you would have gone for this high or for this FEG that you can spot on the hourly chart right in here, you would have been most likely been stopped out if we skip forward. That's why it's so important to not be greedy. You have to stick to the rules. And as you can see, we have already 1, 2, 3, 4, 5, and 6 trades that we have won. And we have not taken a single loss within this entire time period. And as you can see, this is the entire strategy that we have backtested, drawn out on a single graph. And as you can see, the win rate is extremely high. It is 100%, but bear in mind, you will not have a 100% win rate every single month. You will also have losing trades. But overall, in the end, the win rate is so high that it compensates for having a low risk to reward. So in the end, you will definitely be profitable, but only if you stick to every single step that I have given you in this video. As you can see, if we start with a 100k account, we have made over $2,600 just trading that strategy alone. We literally had zero drawdown. The reason for that is because we have not taken a single loss. This is what a real curve should look like. Steady, small growth over time. You have made it this far into the video, and let me be very clear about this one. You can go two paths in trading. Either you're taking the path that I had to take, which led me to countless of platform challenges being blown, and also personal accounts that I have lost. The list goes on. Or you can also take the shortcut, being mentored by somebody who has 5 years of experience, more than 500k in total funding, and also multiple platforms. Now, I have been interviewed by platforms where I basically explain how I have gotten to all of those payouts. When you're trading for this long, your win rate is extremely high. That's why we barely get into any kind of drawdown. Now, and this is not just a regular mentorship, you will get access to everything I have learned over the past 5 years of experience. So if you want to learn how to get the same results, it's the first link in the description.